A bank that you can bank on. AU franchise has been fueling the aspirations of low and middle income people since the last 25 years. With more than 18 lakh customers across 13 states and 2 union territory. Today the bank has built a strong portfolio of 28 products. Standing tall on the strong pillars of financial inclusion and digital banking, AU Bank's USPs are: AU has built a strong franchise clocking impressive numbers. With a focus to enable financial inclusion in India. Recipient of multiple international and national awards. AU Small Finance Bank is your new age bank, bringing ease of banking at your fingertips. AU Bank, चलो आगे बढ़ें।
जिंदगी के कई मौसम अनुभव किया मैंने। हालात बदले, लोग बदले, अगर कुछ नहीं बदला तो बाबूजी की सिखाई हुई एक बात, वो कहते थे जब नींव मजबूत हो तो फिर चाहे वक्त के उतार चढ़ाव कैसे भी हो, हम उनका डट कर सामना करने में सक्षम होंगे। बिल्कुल इस पेड़ की तरह ऐसा ही एक अटूट रिश्ता जोड़ता है आपके साथ IDFC फर्स्ट बैंक। विश्वास, पारदर्शिता और सच्चाई का, क्योंकि इनको आपकी सफलता में अपनी जीत दिखती। मैं तो जुड़ चुका हूं इनके साथ, आप भी जुड़ जाइए ना। IDFC First Bank, always you first.
The global pandemic is challenging the entire world, but it hits the poor worst of all. Our clients live in emerging markets where they often can't work from home, they often can't social distance, there's often no running water, and the public health infrastructure may be weak on a good day. All of that, the pandemic is overrunning, and so the impact on the poor has been enormous. Beyond the pandemic, I think we're still tackling enormous issues like climate change, like gender inequality, data and data protection, and of course consumer protection. And consumer protection is changing a lot because of the use of digital technologies. We are finding and investing and building institutions that leverage those technologies to reach people that have never been reached before.
Presenting 2 new tech initiatives in the retail microfinance sector. Sahyog 2.0 app to ensure data security and efficient services with newly added features like eKYC, geo-tagging and instant credit verification. And cashless payments of EMI via any bank UPI for easy and safe transactions. All this with an aim to enhance last mile efficiency and delivery for the microfinance entrepreneurs.
मुस्कानें जो दबी हुई थी चेहरों पर वो खिल गई है, अब पैरों पर पंख लगे हैं, मंजिलें भी मिल गई है, घर घर हम पहुंचे ऐसे जैसे कोई अपना हो।
A very warm good evening to all of you. I'd like to thank each one of you for joining us this evening for the plenary session on powering financial inclusion through private sector, market-led innovation, digital financial services, and its viability. This session will be moderated by Geeta Goyal, Country Director, India, Michael and Susan Dell Foundation, and the panelists include Anand Bajaj, CEO, Pay Nearby, Hardika Shah, CEO, Kinara Capital, Satish Kumar AV, MD and CEO via FinServ, and we will be joined by Mr. Ajit Pai, Distinguished Expert, Economics and Finance, Niti Aayog. While he is yet to join, he should be logging in any time. In the meanwhile, I would request Geeta to take over the conversation from here. We look forward to a very engaging and incisive conversation. Over to you, Geeta.
Thanks, Arya. Okay, so I guess it's an interesting panel topic, very relevant, very timely, talking about financial inclusion in the context of digital enablement, in the context of, India Stack, in the context of public-private partnerships, local communities, and I guess most importantly, just coming out of COVID and a significant downturn in the economy. So as we go through some of these topics, I know the landscape is large. We'll try and hone in this discussion on a few focused areas, so that at the end of the discussion we can come up with really a list of things that are working, which can actually enable more private sector participation, a list of areas where some nudges on the public infrastructure might help, and also a list of roadblocks or challenges that we are seeing where we really need collaborative efforts to make things happen the right way. So as I look at this topic and the last 4 years, I really think the entire landscape has changed. A lot of accomplishments have been achieved. Whether we call it the Jan Dhan accounts, the eKYC, and every time I have to look at numbers because the numbers keep on increasing so fast. So I think as of today, there are 42 crore Jan Dhan accounts. There are 29 crore RuPay cards. Almost 3 lakh crores has been transferred through DBT. And there are 2 billion UPI transactions only in the month of December. Now, even in the context of a large economy like India, these are significant numbers, which really, and they have come about because, again, we have the right technology infrastructure, the public infrastructure to support it, and a lot of the runway has been taken up by private sector, by market-based interventions, which have been able to leverage this and actually reach the last mile. So yes, a lot has been done, but if you really flip it, we do have not such a strong story on the other side. The fact that India has 500 million feature phones and many of the apps that we talk about do not work on those phones. The fact that 60 to 100 million of India's population does not have phones. So yes, there is a digital divide. We need to take care of it. There are 63 million MSMEs, which contribute to 30% of our employment, 25% of our GDP. Yes, they are the anchor of the economy, but within the 63 million, there are almost half which have no formal registration. So they're hardly visible in a formal ecosystem. Less than 1/3 have a bank account in the name of the enterprise. And given that these are businesses and not households, it's important that when we are talking about financial inclusion of the economy and the enterprise, the accounts need to be in the name of the enterprise. And I would say almost 2/3, if not more, are new to credit or have not accessed formal credit. So they do not have credit history. So yes, there is a significant part of the work remaining to reach out to this segment. And that's why I really call it's deepening financial inclusion, going, not just lower and lower into the bottom of the economic pyramid, and also going with more and more services. So we deepen with the same enterprise how many other financial services can go. So with that as our end objective as to how do we quickly traverse this journey to make, to deepen financial inclusion and get more and more MSMEs, low-income families into the financial ecosystem, I would like us to start off the discussion with a quick round of introductions. I think we have a great panel here, which caters to, on the financial inclusion side, a diverse range of products, a diverse range of customer segments, the private sector, young entrepreneurs, or, as well as the government. So I'm looking forward to that discussion. And I will just pass it on to Hartika to introduce herself. As for my introduction, I think Arya said, I'm Geeta. I work with the Michael and Susan Dell Foundation. This is Michael Dell's Family Foundation, and we focus on education, livelihoods, financial inclusion. Within financial inclusion, we started with microfinance in urban areas, moved on to micro mortgages, and today a large part of our focus is on MSME financing. And we make grants, we work with governments, we do investments, and Kinara or Hardika here is one of the early investees of the foundation. So I do pass it on to Hardika now to briefly introduce herself, Kinara, the customer segment, and also the level of digital interface in your activities.
Okay, thank you so very much, Geeta, and thank you for getting this panel going. I think you set it up really well, right? There are 63 million micro enterprises, and yet so much work is to be done. The credit gap for those micro enterprises is upwards of $400 billion. And largely that is because the 90+% of these MSMEs are under the 1 crore annual turnover. So most of the credit they access ends up being informal at incredibly high rates. And often the credit is also invisible because it's taken as a gold loan or a personal loan by the sole proprietor, the business owner, and essentially deployed into the business to keep the business operating. Large part of that problem is well understood, but it's always good for us to reframe and hang on to that problem set, which is about lack of documentation, lack of formalization, lack of credit history, and most importantly, lack of collateral and lack of relevant products that bring them into the fold of financial inclusion. So Kinara Capital is a socially conscious, systemically important NBFC. We have been driving last mile financial inclusion in this micro enterprise segment, specifically the sub 10 lakh monthly turnover segment. And we're doing this by providing fast, flexible, and collateral-free business loans for the business to grow. And we do this in our very own unique fintech and high-touch blended model. So over the course of the last several years, especially since MSDF has invested, we have disbursed over 1,800 crores across 50 to 60,000 loans to micro enterprises in 6 states, largely in South and West India, across 100 cities. And most of these enterprises are in manufacturing and trading and a little bit of services as well. So our typical customer, because we are talking about the segment being very large and is a little bit more formal than what Geeta was explaining as to those that are completely without a business bank account. Our typical customer is in his or her mid-30s, operating a small manufacturing business, maybe auto components, machine components, maybe finished goods like bags or furniture or fashion related, living in a rental property at a home and in for business, and is employing 5, maybe 10 employees, and is looking for very small 4 or 5 lakh loan to essentially for working capital, for raw material purchase, for supplier payments, or for machine finance, for buying a CNC, VMC, some sort of even, different kinds of machines to help with the manufacturing process, right? And so Kinara Capital, we provide a range of products that are very flexible, that allows them to match the purpose of their need to the features of the loan product. Everything from a term loan that goes as short as 12 months to 60 months, a bill discounting facility, a line of credit, and we even have a discounted product specifically for women enterprises. We call it Harvikas, because we do need to bring more small business women entrepreneurs also into the inclusive agenda. And most of these loans are an average ticket size of 3 to 4 lakhs. You mentioned where the intervention comes in terms of technology. And you're right, a lot is happening in the MSME space, a lot is shifting in the MSME space. And with the India, this whole open digital infrastructure that is democratizing data access, we've been able to rely heavily on technology, both for KYC verification, for operational efficiency in the processing, even if we have to manually digitize the customer data, for verification where we can, if they do have GST or other formalization, the verification part of it, and most importantly, for essentially doing data-based decisioning, algorithmic decisioning for loans, and also for prioritizing of collections. So where possible, we have been able to use as much technology, which is part of the open infrastructure and our own built tech, to essentially take the decision process from what used to be, or what a traditional bank process to apply for a loan could be 2-3 months. Maybe a NBFC process, if you're doing collateral backed loan, could be 15 to 20, 30 days. We have been able to make that decision because it is collateral free, and because we're using a lot of tech, bring that all the way down to 2 to 3 days, which is actually a huge lifeline for the micro enterprises, because if they have a new order in hand or they want to build a new product, they want to know whether they will have money to do that. And the ability to get that decision in 2 or 3 days enables them to take that step. So that's what Kinara Capital does. With this, we've been able to actually impact job creation at the bottom of the pyramid, created over 70,000 jobs, and essentially sustained more than 200,000 jobs for the businesses that we work with. And we're really proud that we've been able to do that, but we feel like there's a lot more work in that area that we still need to do. I'll take a pause here and hand it back to you.
Yes, thank you, Hardika. That was great. So I mean, I'm just picking up words: flexible loans, technology for efficiency, and we'll come back to these as we go into the panel. From there, can I go to you, Anand, and request you to do a quick overview of Pay Nearby and how you use technology?
Thank you, Geeta. We believe that we are taking the high end of technology to the bottom of the pyramid. We serve with 500,000 retail partners to 150 million citizens in about 16,532 PIN codes of India, processing about 5,000 crore each month of sachets of financial services. Let me tell you and compliment the nation that NPCI and the regulatory framework has done future proofing of the nation by way of setting up the Aadhaar infra and the whole India stack. So all of that adds up to a great enablement of the nation. And Aadhaar is a backup of BCP of ATM. You will relate when I say bank hai par banking nahi. We serve the 150 million citizens whose cards were blocked just before the lockdown in November. And they are able to use these 10 cards without PIN, without forgetting passwords, at a kirana dukan telling 2 kilo aloo, 1 kilo pyaj, or 500 rupees cash dena bhaiya. That's the interaction Pay Nearby has accomplished at the retail outlet. That said, products are ABCD and customer segment are ABCD. And I will explain. Aadhaar ATM, bill payment, card payment, and domestic remittances are the large key 4 products that we have. Of course, we have EFGHI, inclusion by alphabets, actually in true sense. And the customer segment is Aya, Bai, chauffeur, driver. The people who serve you is where we go to serve them, bringing financial liberation to the nation faster than planned. I'll pause here and we will have more covered in the session ahead.
Excellent. Thank you, Anand. Before I go to Satish, Ajit, if I can come to you to, again, give a brief introduction both to you and your role at Niti Aayog, and also given you've had the benefit of listening to Hardika and Anand. So, purely from a government's perspective, if you see the public infrastructure was laid out with certain expectations in mind, have they really played out? Has the market picked it up? More needs to be done. Just quick comment.
So yeah, my name's Ajit Pai. I look after economics and finance at Niti Aayog. A very significant part or priority of Niti Aayog is to be prioritizing MSME finance and financial inclusion. So both of those areas are critical to what we are focused on right now. So they're big priorities for us for obvious reasons. And COVID-19 has actually made us pay much closer attention to both of those. Whenever you have a downturn, these are areas that get hit first. What is very interesting, first, I think to what you asked about, Geeta, which is with all the foundation building that has happened, where are we seeing the gaps? And I think some of those were highlighted by you yourself when you first began. And then I think Hardika and Anand Bajaj have also sort of suggested where some of those gaps might be. So you've talked about the digital inclusion, but also the exclusion of the people that don't have smartphones. I think Hardika said something very interesting in her first sentence, which is she said fintech and high touch together, which suggests that the level of automation is not very high. And Mr. Bajaj, of course, talked about his feet in the street, which tells you one big obstacle to actually watching, financial inclusion in a true sense from a long-term perspective, but in the short term and intermediate term being extremely critical. So some of the things that we have looked at that point to that, of course, different people have different opinions on what that's due to, but you have, Jandan accounts that are not being used as frequently as they can, various theories on that. But, trying to figure out whether, what that gap is and how do we make not just inclusion, but what you could call the financial education aspect. Just having that bank account, having that mobile, having that Aadhaar might not necessarily, while they are all enablers, it might not result in great use. So our role is to figure out, what's going on over there. I think the actual work is going to be done by, the other panelists over here that have business models that are going to drive it. I think the Bajaj, Mr. Anand Bajaj's business model is an interesting one, which is, actually fulfill that gap using, his army. Hardika's is a different one, a high touch, but using, electronics, the fintech behind it. And then, of course, we'll hear from Mr. Kumar soon after me telling us. So we are looking at these models. We are trying to see the obstacles that are there. And some of those gaps are being filled by these models. But is this the best way, and how the government can help with policies to ensure that this proliferation, happens much faster and that digital gap closes faster, and also the financing gap, especially for the MSME areas, gets filled, much faster. I'll stop with that.
Thank you, Ajit. You will have a lot of suggestions on what the government can do. So, yes, Satish, over to you.
Thank you, Geeta. So I'm Satish Kumar. I represent Via Microfinance. We are a 6-year-old NBFC MFI, a systematically important company. And we service 7 lakh customers in deep rural areas in 7 states. We basically provide affordable small loans. These are all in joint liability group. And basically we give income generating loans. The profile of our customers, basically they are, all women customers. All our clients are women. And typically they are in mid-30s. They are running small businesses, be it tailoring, be it milk vending, vegetable vending, or kirana shop. So there are some 160 vocations which we actually kind of, fund. And the loan sizes, we have various products. The loan sizes are typically in the range of 30,000 to 50,000 rupees. And the loan tenure is about 24 months. So we are basically serving all the underserved and unserved population of the rural India. Because nowadays we know 30,000-50,000 is not big money when we are talking of urban and semi-urban, but we go to deep rural, we realize that even that amount is actually, life-saving for them. Coming from the microfinance world, what we have done is we have come a long way in the last 10 years, wherein the documentation used to be a lot of documentation in paper, but now we have digitized that. So we are a kind of a 2.0 for microfinance, if you will. So what are the interventions we do as far as digital thing is concerned? When I talk about customers, first and foremost, we have all branches, they're all paperless, and all our loan officers carry tablets, and all the documentation they do is fully digitized. While acquiring the customer, they do QR code scanning, live credit bureau checking. And we also We used to very much utilize Aadhaar, as a unique identifier until Supreme Court has stopped us from doing it, and now we do voter ID. And in fact, we request Mr. Ajit Pai to actually help us in getting Aadhaar to be utilized by microfinance again, because that is a great help. We also, the disbursement is completely into the bank account of the customer's account. Now that these Jan Dhan accounts have really helped us, because every customer has a bank account. So we don't do any cash disbursals, is entirely digital. And we also do geotagging of all our center meetings. When we go and meet the customers, they are all geotagged. The loan utilization checks we do, they are all again geotagged. So these are all this data is captured so that we can actually utilize it. We also have, we send out communication to these customers in vernacular SMSs. In a period of that loan tenure of 24 months, we send 60 times we are in touch with the customer digitally. And then of course, 58 times physically. So there is, again, like what Hartika said, there is high touch as well as fintech that is utilized. We also have cartoon-based stories and games to educate the customers. The financial literacy is taken seriously, and the customers are actually taught about the loan, how it should be used, what is the interest rate, how they should pay, etc., etc. And as Hardik also said, these are all completely unsecured, non-collateral loans. When it comes to employees, we also do a lot of these tech things. So right from their joining till the end, exit, everything is HRMS. It's all digital. So leave and payroll processing, PMS, that is performance management systems, everything is digitized. Training is also digitized. We have what we call it as Gurukul, where we do everything on Zoom. We send modules to all our loan officers, and everything is tracked. How many minutes have they seen, what they've done? There are exams which they have to clear to go to the next level. So at various levels. And finally, when it comes to communication with the employees, we do what we call as We Connect, which is a e-newsletter which goes out every month. We also have We Care for customer protection, and we think we have recently launched for a town hall and integrated network of the customer of our employees. So overall, we use technology as much as possible and less paperwork, which will also help us in kind of doing a lot of predictive analytics, both for designing new products as well as also understanding about the customers' repayment efforts. I will stop here and back to you, Geeta.
Thank you, Satish. And I think listening to all of you, a lot of good work is happening on the full field. I think innovative approaches, market-led approaches, cost-efficient approaches, all being put together. Now, as we take this discussion forward and say, okay, enough good work done, how do we do more of it, and how do we really, expedite the journey forward? I would say we could break it into three parts. The first part really being, accessing or customer acquisition, the second part being cost of capital, and the third part being risk of dealing with the segment and how do we mitigate that. So in each of these sections, it would be good, we can do a quick roundtable, but if you could, based in the context of your business, really what are the two things that are working well? What are one or two things that are in the direction of working well, and what are one or two things which are really roadblocks, and we should, try and find a collaborative solution on that. So starting with customer access, acquisition, even assessment, in that broad bucket. Anand, if I start with you and just get thoughts from you in terms of how, really what's working and what's not, and, what can be fixed.
Yeah, so what's working, let's understand the context. 6 lakh villages in the country and 1,05,000 bank branches. So with 80% concentration in urban and industrial corridors, it leaves about 20-30,000 branches for the rest of 6 lakh villages in the country. So very clearly, bank hai, banking nahi. If I can reiterate, there is a lot more which needs to be taken to the last mile. That said, while serving with 500,000 retail partners, we believe Har Dukaan Digital Pradhan is the campaign that we run, where the Kirana shopkeeper becomes my bank trust dispenser. So he dispenses sachets of trust. That said, how do we reach out to these customers? 93% of my network is in rural retail India, where we serve all the 115 aspirational districts of Niti Aayog. We serve, Ajit sir, we serve 780 crore each month in these 115 aspirational districts. And we were awarded by Ministry of Electronics last year for rural financial inclusion. That said, the chief economic advisor has been talking about 1.28 trillion INR, which is not accessible to people or people are saving, which is true because of the bank and the reach distribution. We do reach out, Geeta, to our citizens through the digital network, the digital and applied to the physical network. NPCI has done a fabulous work on the whole India stack that has been built. So we are digitizing, satellitizing, and granularizing the technology to accomplish the financial inclusion agenda and the policy accomplishment of what has been written. Yes,
Sorry, if I can just ask you, because I think a lot of people use the term digital, physical, and digital. I know you are using digital.
थोड़ा डिफरेंट होना चाहिए ना, नजरिए का फर्क है गीता, नजरिए का फर्क है. एंड अदरवाइज गालिब भी कह गए कि जलाए थे चिराग हमने दीदारे हुस्न को, हमें क्या मालूम रोशनी होगी. So how you look at it is very different. What you are able to do is different. So someone applies physical to digital. We have a mindset of digital first and applying it to physical infra. So the way you look at the problem is how you will be able to solve it faster, Geeta. That's the only difference, I think. फर्क है सिर्फ नजर का, बाकी पत्थर और कोयला एक साथ ही पड़े.
Sorry, go ahead. This was just, I thought we should clarify that. But
yeah, but yes, good you asked it. And Geeta, I must tell you that prompts that for the rising of the nation, यही माटी उभरेगी और यही जर्रा चमकेगा, बाहर से कुछ नहीं आएगा. Everything has to be done here, and that is what we have been able to configure. My corner kirana shopkeeper as a trust partner and serving the citizen literally 18 hours a day. When you can go to the outlet and say 2 kilo aloo, 1 kilo pyaj, 25 rupees ki FD. So that is what we do. We serve 35% of India's Aadhaar on our shoulders. We have deployed technology to the hilt. We automate or eliminate. That's the rule at Nearby Technologies. Otherwise, you can't scale. For 70 years, the banking that has not reached. अगर उसको पहुंचाना है तो थोड़ा तो different तरीका अपनाना है, right? We have given our switches gratis to partner banks. We don't charge money on that. That said, NPCI has been very terrifically supportive and productive during the lockdown. All our technologies have been ASP certified. We have NPCI net direct connectivity. And what it means is actually the 1600 transactions per second that we are able to process don't fail, because this 700 rupee transaction that my customer does is your cab fare for the dinner tonight. It is his whole month's ration, madam. So we are very ultra cautious about the customer segment that we serve who does not tweet. He does not tag Madam Nirmala and writes complaints. He talks to the Lord Almighty. So all our engineering has been applied to the automation at the back end so that this customer does not need to complain about us to the Lord. That's what we do in short. काफी मजा आता है गीता. It's a great, terrific place to work.
So what needs fixing, or whatever needs fixing, you're fixing on your own? And
yes. So नहीं ऐसा नहीं है. Don't let it go like that. If I may take liberty to say, नीति है पर आयोजन नहीं. And I would certainly take help of Ajit sir down the line that the policies have been written wonderfully with fantastic intent. But when it comes to grassroots implementation, the rubber meeting the road, tire फट जाता है. So there is a TDS of 5% debited on when you withdraw cash from your account. 6 lakh villages don't have 6 lakh bank branches, madam. It has only 20,000 bank branches of PSU banks. They do not recognize the banking correspondent agents of other banks. Whereas the 194N Proviso 3 of Income Tax Act clearly says any agent of a bank, if he withdraws cash, shall not be levied with TDS. Now for 0.5% income, Geeta, he's levied 1,000 times, 1,000%, which is 5% of TDS. Someone starting business with as low as 50,000 rupee ends up blocking 16 lakh rupee at end of the year for 18 months because TDS refund happens after 18 months. So 1 lakh BC agents have stopped the business after 3 months of work. I would take help of Ajit sir's office to solve this policy intent to help it sort. Second is you will at this forum, I would like to say that the financial inclusion suffers 27% GST, unintended, but it is a 27% cost to the financial inclusion services. Again, GST Act says, ruling 9317, that inclusion to the accounts, services to the accounts in rural shall be exempt from GST. But the advancement of technology leaves us to the vagaries of the Tax Act. I will explain. Now, when you remit money from Mumbai to Khagadia in Bihar, even if it is a rural area, you use single IFSC code. You have no way to find out, is it rural or is it urban? I will rest my case here. I will come and connect to Ajit sir and see how policy can support.
Excellent.
Thank you.
Thank you, Anand. Satish, if I can ask you to go next and follow up Anand on, again, things that are working for you and the customer set and things that are not. Because from your customer base, I assume a lot of the digitization is at your end and not at the customer's end.
Absolutely. See, our customers, like I said, most of them are deep rural. When I say deep rural, we do not have branches even in district headquarters. The nearest bank, our branch is 35-40 kilometers from the district headquarters. So we are actually going into deep rural. And on one side, the good news is we have 43% of our customers who are new to credit. So at least we can feel proud that we are going and serving people who did not have the facility of loans. But the challenges are, like you said, they do not have any documents, right? So there is absolutely no way you can find out their income, their cash flows. We do a lot of these surrogate things. We do house visits. We see what are the various assets they have, and we try to ask them how many people are working in their home and how much they spend on groceries, on medicine. Because if you ask them what is your income and expenditure, there's no way they are going to tell that. They don't know. So we actually do a lot of these. So that takes a lot of time to actually assess each customer, right? So that is one challenge which we have.
And Satish, if I can ask you, you mentioned the 43% new to credit.
Yeah.
They are at the household level or at the borrower level? And
Borrower
are you
level.
able to even check whether at the household level they have credit?
Borrower level. We do not have the household because we will not know who else in the household is taking loan from somebody else. So at the borrower level is what we actually check, because that is what when we do the CB check and we see that they do not have any loans whatsoever from any other party. So therefore the good news is more and more people are being brought into this, financial inclusion. As far as the challenges are concerned, yes, it takes that much more time for field assessment and understand their ability to repay. Ultimately, we say in our terminology that whether they have the willingness or not, whether they have the capacity to repay or not. Now, most important is they should have capacity and willing both. So, and that's why despite all the technology, we still depend a lot on our field staff, who are the first level credit assessors for this segment. And also the second thing is in terms of, like I said, the unique identifier, that is very, very important. We are trying to deal with voter ID, but more and more we are seeing that there are frauds committed by the clients, or sometimes even helped by the staff and other local people to actually kind of give fake voter IDs and all. And interestingly, I am given to understand, unlike Aadhaar, where you have only one Aadhaar card per person and one number, people can have multiple voter IDs. And so deduping somewhere is not happening in voter ID. So that actually kind of puts us a little risky in that. So that is one challenge which we are facing, though we actually do the dedupe with the Karza, which is a organization which actually, kind of has a database of the voter ID. So customer acquisition, yes, it is, we are able to go into more deeper areas, but
It's
the
feet on
cost,
street. I
feet
mean,
on
most
street,
of
and
your customer
cost is very high.
acquisition
Yes.
and assessment is feet on street.
Yes. Cost is high.
Okay. On that note, Hartika, do you want to go next before we turn it over to Ajit? Yeah.
Yeah, of course, happy to do it. And it was really interesting to listen because both Satish and Anand are working largely in rural markets, whereas Kinara is largely in tier 1, tier 2 markets. So we are seeing a very different shift that is happening in these regions than perhaps in the rural regions, right? And so one of the things we talk about, you mentioned that smartphones are still, penetration of smartphones is still not there, but in the MSME segment that we work with, I feel like our customer base is 95% have now smartphone and post geo practically free data. There is a huge shift that is happening into the vernacular voice continuum rather than the millennial continuum that was there pre-geo. And frankly, the formalization of these businesses with GST, while they may not need to have a GST registration because their turnovers are less than 75 lakhs to a crore a year, their buyers, their suppliers are asking for input credit. So we are finding that our MSMEs are getting more into the formalization process. Now, there's a long way to go, but I think the recognition that the formalization will also enable them to get access to credit is its own impetus for small businesses, micro enterprises to move down this path. So what we are noticing is that when GST first rolled out in 2018, maybe 10% of our customers were filing GST returns. This year in our survey that we did during COVID, we found that more than 50% of our customers are filing GST returns. More than 40% have net banking access, something that wasn't that high before, right? And what surprised us most is that 20% have active emails and 25% have actually applied for a digital loan through their banking apps. So there is this convergence of Bharat and India happening, even if it is perhaps a little bit more in tier 1, tier 2, and hopefully it will also happen in rural thereafter. And so what this has enabled us to do is transform our business model. I mean, Ajit was talking about the fintech and high touch. We have been able to transform our business model, which was probably more street led first, and to move it to more of a data science based decisioning for underwriting, which is built on this years of the digitization we have already done and the tracking of performance of customers that we have, and bolting on other data sources, and still being able to provide this doorstep service, enabling the digital credit at scale as something that we can push for. What is the challenge, though, on the technology side? I would say some of the pieces that we talked about, whether the consent architecture is Aadhaar, like the Supreme Court rulings around Aadhaar, is it enabled, not enabled? Our customer, from a customer experience perspective, just because a customer is credit starved doesn't mean he wants to give you his Aadhaar every 6 months or every, he wants to do it once. That customer experience has to be the same regardless of which end of the market you're in. So when we think of what is driving essentially the cost of service or cost to customer, why does the customer pay a different interest rate for different products in the market? The three things being the cost of capital, the cost of delivery, and then the cost of risk. Now, the cost of delivery is, at least in our segment, is condensing. The cost of risk is getting refined, but the cost of capital to NBFCs is actually going up. And all the interventions that we attempted last year, TLTRO, et cetera, have all been designed right, but somehow fallen short of making it.
Hartika, hold on to that. Let's cover that in cost of capital.
Okay. I will hold.
Yeah. I did want to take a follow up in terms of the credit risk assessment for your customers. You are doing that a lot more physically, or are you getting a record of all their digital transactions?
See, we are getting some records of the digital transactions, some coming through GST, some coming through banking, and then the rest being digitized if needed. So our position now is we can do the automated decisioning based on what is verifiable and available. And if that's all you asked for or needed in terms of a loan, then we don't need to go any further. But if there's a mismatch between what you're asking, what is verifiable and visible, then we do need to have the field teams come in and for that field intervention to add on to that data set. And then that will allow us to either give you an increase to the amount of loan you needed or still end up with the same answer as the case might be. So that's, but we are seeing a little more data come through on both on the banking side, on the GST side, to be able to get verifiable information to make automated decisions.
Thank you. Ajit, over to you. I mean, yes, you can definitely respond to some of the suggestions made, or you may, choose to take them offline. But it would be just good to hear from you on, reflections on the cost of delivery, because I think a large part of what the government did in terms of the digital infrastructure was to say, how do we reduce the cost of accessing and delivering at the last mile? And related to that, I would say, is also from a government's perspective, are you getting enough, not a government perspective, let me say from an economy's perspective, are you getting enough data on the last mile customer? And if and how credit is even helping them grow and the economy grow as a result? Or is that still a black box?
Okay. So first of all, let me just provide a caveat that the opinion I'm providing today is not the government's position, but it would be my personal position rather than Niti Aayog position. But the way I see it over here, is that the government has done a very good job in terms of laying foundations, which are an enabling environment. I would not say that today the cost of delivery issue has been fully dealt with. But what we have dealt with is coming up with an alternative to the gap that's been pointed out by Mr. Bajaj. He talked about the number of villages in this country. He talked about the total number of bank branches. He talked about 80% of the bank branches being urban, so that remaining 20% for multiple villages, orders of magnitude difference over there. So there was a bridging that needed to be done, rather than use the traditional approach of physical expanding physical infrastructure when most of the world has excess capacity there, and we might have even excessive infrastructure that would be stranded assets. It did make sense for this new rollout and actually to approach things from a digital. There has been a leapfrog in India, people getting the mobile phone well before they got a landline, before it's reached everywhere. So when we are appreciating that, we're also saying that, okay, you have this foundation, the government as a body that can take, provide capital where there's no economic case, where there's market failure. And I think the government's done an incredible job in doing that, both with the Aadhaar, with the, ensuring mobility reaches, across the country, whether it's a smartphone or even at least regular connectivity with a phone, what they call a feature phone that can at least send minimal data or digits across, which I'm sure, Mr. Bajaj's men, some of them would be even utilizing that. And also with what I would call the Aadhaar, which is trying to make some things, trying to provide this unique identifier, which would be the equivalent of a social security number in the US or other identifiers in other countries. But as has been pointed out, there are interventions that can happen for other reasons that are difficult to predict. On the revenue side, Mr. Bajaj has run into issues of business cases where there's a 5% TDS that has to be cut for any cash dispersal, which for a business which is a 0.5% fee business would make the case for continuing in that business very challenging for something that is critical. So that's something that I think the revenue department will have to look at, and we'll have to sort of explore that further. We can take that offline. But also, as has been pointed out by Mr. Kumar, if the courts take a decision, changing something like that is not just a policy decision. It might involve looking at what the core root causes are, and would involve sort of multi-level change. So that's something that we should be spending more time on, both as in both in terms of industry as well as the government, in figuring out how to allay all the concerns that the court has, but still provide the functionality that the Aadhaar was intended to, and how to do that. So always open to get good ideas over there that we can present. But to come to that last question, which you asked me, so the way we see it is that you've built the highways, you've provided the gas stations, you've done all of that, and now we need to be providing sort of getting the cars on the road, which is what I'd call the cost of delivery. What is that? How expensive is that delivery going to be on top, and how do we bring down that cost? Where I think all the business models that we have heard of right now are part of the way, sort of trying to address that same issue and trying to close that gap. And then, of course, the last part that you talked about, which is not just cost of delivery, but the overall cost of capital, or cost of service delivery, as well as use of the service by the user, and how to bring that down. And I think those are the two areas which are still open, where I'm seeing evolving models. Everyone has a different approach to it. And the government is spending time, I can assure you, on trying to figure out how to bring down both of those costs. Now, some of it can be addressed with technology, some of it can be addressed with changes in processes, some of it can be adjusted with changes in regulation and policy. So we are open to looking at each one of those, and it might be required. Even technology might require some changes in policy, because it might, a lot of these new policies that come in have unintended consequences, like the one that Mr. Bajaj made us aware of, or even Mr. Kumar made us aware of. So let's look at those a little more closely, I think, when we go to the last round. And then even offline, we're happy to look at some of these issues sort of one-on-one, because they're real issues, and they impact actual delivery on the ground for that cost of not just cost of capital, but also cost of delivery. And how do we really proliferate and close that gap, both in the financial inclusion side, as well as sort of the cost of financing and access to financing side. So I'll stop over there.
Yeah, and just the last point on data on MSMEs. Do you feel there is enough of that coming into the systems to be able to make choices for the economy? Because again, if the NBFCs or the lenders are not getting the data, I mean, how does it even aggregate up at an economy level?
So even over there, I would say that the foundation building, has been done. So when you looked at two massive formalization transformations that have happened within the Indian economy, one of them I would say would be the JAM, but the other one was also GST. So I think Hardika mentioned how she's seeing a lot of people entering the GST fold and the formal fold just because they want to get the credit that they otherwise would lose. They also automatically, once that web builds out, you're beginning to formalize the economy. And all of us are aware that a very small percentage of this country actually is part of the formal economy, and an even smaller percentage is part of the tax-paying part of the economy. So to get all this data, I think the foundational work, GST was spawning this entire network that's going out there, and the JAM Trinity is also trying to put everyone at least to have a financial sort of identifier and getting some data on it, even if they don't have a PAN card or don't have other things. There's a beginning of this data sort of beginning to get accumulated and creating a stream. So as anyone that's in data analytics go, the period and reliability of the data is based on the amount of data and volume and the consistency by which it's acquired over periods of time. And the foundations for that start getting laid 2016, 17, 18. We watch a proliferation of all of this. But unfortunately, we had this event in 2019, spilling over into 2020, COVID-19, where right when all this data would start becoming useful, you start getting 3-year track records in some of the early adopters, where you started watching this massive explosion of GST data. 2017, July 1st is when it started, when you started getting all this other data with people that are using their accounts. Right, that's right when things sort of just ceased to happen and created a pause. And now when things begin after this pause, it might look very different for a lot of people, for many industries. For example, if you're on hospitality focused on foreign travel, if you're in, many of these sectors won't have the same track record as they did before COVID. So while a lot of that foundation building happened, a lot of good data was getting created. We were getting incredible data streams that, I think Satish's business, Anand's business, even Hardika's business are using. They talked about access to this. As a country, I think that this big pause, this massive decline in GDP in the first fiscal quarter, or second, calendar quarter of 2020, what it created, and then the uneven recovery, has made it challenging for that data to be as usable as it otherwise would have been. But that stream is growing. It's a very good stream. It's growing. It's being promulgated by the credit scoring companies, Experian, TransUnion, Equifax, all of them, other service providers. So that is beginning to sort of gain momentum, and I think the pace at which that data stream is growing is able to result in many more business models and fintech models that are quite creative and can have long runways of growth already.
I think which brings us almost to the last question. I'm combining two questions now. You could choose to answer both or either one. So one, definitely we need to go and revisit the cost of capital, how it trickles down actually to the ultimate borrower, and where are the big buffers which can be either squeezed or mitigated. And the second is just coming off, the slowdown from COVID, and realizing that the segment that we are talking about for financial inclusion, I mean, they may have been the worst hit in terms of businesses being wiped out, revenues going down. How do we ensure that we, in order to put them on a path of revival, we need to put our fintechs and our NBFCs and everybody who's servicing them on a stronger path of revival so as to be able to do that. So really, what are the bottlenecks? Or not even bottlenecks. I mean, let's just say, in order to speed roll that, what would be most helpful from an intermediary or a player perspective who is actually delivering financial inclusion? So let me start with you, Hardika, given you had started talking about cost of capital. And yes, you could address both cost of capital and the risk issue. But yeah, let's restrict it to 3 or 4 minutes because we're in the last half an hour of the panel.
Absolutely. Thank you very much for prompting that. So let's just talk about the cost of capital, right? One of the primary issues, plaguing, if you will, the MSMEs is credit access, and the last mile NBFCs that are willing to provide the credit access are finding themselves in this constant existing liquidity crunch, which might have been exacerbated by COVID, but was existent before that. And we need to acknowledge that that was a problem even before COVID, right? So in some ways, we have to figure out how to break this deadlock. We have great policy that is happening, but somehow the risk appetite, with the banking system is just this risk-averse positioning that they take that excludes the support to NBFCs and therefore to the micro enterprises is something that is not sustainable in the long run. I'll give you a very simple example. ECGLS, our Emergency Credit Guarantee Scheme, great idea, great program. Entire 100% of our customer base is priority sector lending or priority sector, lending category. And we would have loved to do that program for all of them. We were able to get 0 rupees from a single bank for that program, even though the government of India is fully backing the program. So somewhere this trifecta has to be cracked in order for triple B last mile distribution NBFCs can be part of the solution and not be left aside, because in the end we're just disadvantaging the micro enterprise from getting ahead. So
just being a devil's advocate here, Hardika, if I look, I recognize that you're saying enough risk is not being taken, but from a banking perspective, yes, credit ratings are important, So, if the objective is let's get to the last mile through the larger players, and let's do large loans to them, and they may be, safer loans as well for the bank. Where do you see the role of the small and the medium NBFCs, which is not being bridged by the larger NBFCs?
No, so first of all, let's just take that example where if the position of the bank is to protect their capital, which they should do, they have shareholders. You have a Government of India product with 100% guarantee. At that point, we should have opened the floodgates when they're sitting on so much liquidity. So that to me was some, unfathomable, that why that did not happen, right? And so there are two ways to do this. So going forward, if government of India is going to sign up for that kind of guarantee program, then the regulator or the finance ministry needs to take it one step forward and say, all right, banks, you will distribute this capital down even to a triple B entity, or at least to priority sector lending entities. So some way to be able to calibrate for that liquidity to move all the way down to the last mile.
Excellent. And if I can just add a point there, I mean, my grouse always was, I mean, not just for the NBFCs, but even within the MSME, there were not category allocations of, medium enterprises, small enterprises, and micro. So especially when we are looking at a revival at an economy level, we do need to make sure that different parts of, either the lending ecosystem or the entrepreneur ecosystem get their respective share. Satish, any comments from you on either cost of capital or revival of the economy post-COVID, where we are, and what VIA is doing, and exactly what other boosts are required from your customer perspective?
Sure. So just to add to what Hartika is saying, see, this cost of capital, like we say, yes, it is very important for people to, all the banks or the lenders to be, they should take their, they should do due diligence and, make sure that their capital is returned. But the fundamental question is, if everybody was so risk averse, microfinance industry would not have existed. Microfinance industry, all of us are actually giving unsecured loans to our customers. Okay, and JLG, Joint Liability Group, okay, a lot of this has been spoken, many conferences have been happening. Now, if everybody perceives that it is the most risky business, then that business should have actually collapsed. But we have seen that for more than 30 years, it is flourishing. And after every single crisis, it comes back more strongly. Believe you me, in May, June, when all our lenders were asking, will your staff come back? Will your clients come back when this lockdown is over? What kind of collections you get? Nobody could answer that, But touch wood, today I can tell you that the microfinance industry, I'm not talking about VIA, everything bounced back so much that our collections are in the range of about 94 to 97%, depending on which state. I don't see any other sector bouncing back so much. Now, what has happened? We believed in our clients. We have given them unsecured amounts, right? And then we are getting it back. So same thing, suppose if these banks, instead of saying that AAA rated, I don't want to name, but you go to a AAA rated, a large company and give them 90,000 crores, and one day it, busts. Rather than that 90,000 crores, had you given to 90,000 small companies, you would have got at least 90% back, if not more. So what are we talking about here? I mean, we as entrepreneurs, we are taking risk. And, you have so many, anything that we are talking about. And frankly, when I read that book of Tamal Bandyopadhyay today, The Great Indian Banking Tragedy, you just read the first 50 pages. After that, you don't want to read. Honestly, I could not read it because, here we are being really put to test. For giving 5 crore loan, 10 crore loan, we have to do reams of, reports, everything. And there, I mean, the kind of things that happened, it's just unbelievable. So what I'm only saying is that please help us to help the poor people of India. Exactly, this TLTRO, SLF, and, partial guarantee scheme, fantastic schemes. I have absolutely no doubt about that. But I don't know, the criteria that are being created, they are not allowing that money to come to small and medium enterprises like ours. Sometimes I feel that those criteria are not inclusion, it is elimination. So first they said that you should be 3 years profitable. So first 3 years, there is no way you can get that. So, okay, finally we said, thank God we are 3 years profitable. You put it across. They say, by the way, you should be 5 years of total business. So we said, good, we crossed 5 years. Now we will get it. And suddenly they say, by the way, that 5 years should be your own book, not, you should not be a BC to the bank. Come on, guys. 5 years I've done this business. First 2 years happens to be a BC for a bank, which is also microfinance. So how is it different? So the point I'm trying to make is, I think we have to actually kind of be more practical. All the lenders, government, banks, everybody should be a little more, take risk, just the way we are taking.
Okay, excellent. So I'm hearing risk and pragmatism both coming in, and
Yes.
some form of nudged trickle down effects coming in.
Yes,
So, I
please.
mean, like it cannot be restricted to the top guys. Yes, Ajit, I don't know if you want to come in now before Anand. I'm trying to make sure that, always you're not the one responding. Maybe you can pose some questions before Anand.
Certainly. So I think the one thing that I think is very clear when you look at the gap and you talk about the speed at return of the industry, that there is this big credit gap in this country. And a large part of that credit gap is, I would say, in the MSME, the micro, the small, and also in the medium. I would not underestimate that gap in the medium. We have a lot of schemes for what is small and what is micro. But then after that, access to capital is easy once you're a large corporation. But that transition, that hand-holding in between, there is this gap over there that also needs to be filled. But to Mr. Satish's point, when there are limited resources for all government programs, it is exclusionary. You have to decide, like even when you look at all the customers that come to you, you don't give to everybody. There has to be some criteria for selection. And if the criteria for selection is inappropriate today, Mr. Kumar, then we should examine that. So I think we should look at it and say, how can that criteria change? But there will be a criteria which they have to have some benchmark by which they will consider the companies, and to reduce the number of people that, otherwise if you're giving to every single NBFC, you know how many NBFCs there are, over 10,000 in this country. So they need some criteria to narrow it down. They need this thing to be exclusionary. But if that criteria is the wrong criteria, we should revisit it if there's an issue with that criteria. But that is something that would be a default of just the selection process of limited resources and not having unlimited resources. But to come back to the main point of risk capital and risk taking, I would completely agree with you that there is a greater risk aversion in this country, whether it's from the it's inset into both the regulator as well as the people with policy making. There's a lot of risk aversion in this country. But if business models are structured like the ones that all of you are operating, are structured in a way that risk is absorbed by diversification, by portfolio, by strategy, by whatever, the models seem to be growing quite well. You yourself, Mr. Kumar, talked about bouncing back very quickly to 94, 97. So that's an indication that your risk management there is something about your model that is more resilient than other models, because I can assure you there are some of those AAA rated companies previously that are not bouncing back in the same way you are. Mr. Bajaj has also talked about how his business has come back. I think, Hardika has talked about how the disbursements are already higher than the levels that were there a year ago, even prior to COVID. So these models that have some resilience or have something to them will come back. And they will counter this risk aversion. And once you reach a particular scale, then you'll automatically start being able to access the risk averse capital more easily. So if there are issues in doing that, then we've got to look and examine those as policymakers and see what needs to change to make that easier. But at least, right now, when you're in an environment that was previously already risk averse, you have a big shock where people's financials are impacted materially. That lack of trust in sort of mid and large enterprises is there already, which is, will they come out okay? Will they not come out okay? Is my investors' capital going to be safe or not? And some of those issues are much more distributed amongst the three business models that I'm looking at right now than the level of concentration risk that is in other business models that do large lending. So there is, I think, a case where technology, fintech can be applied, but also the risk that you have to make a case to your lenders, or we can look at other alternatives. Looking at your lenders, where you have diversified business models that are more resilient. And what you've told me right now makes a fairly strong case. Now, whether the system is open to it or not, I know that the flexibility that is there within some finance companies might be greater than with the banks. The banks might have rules that are set. But if we can highlight what exactly those obstacles are, there may be ways to work around sort of seeing what we can do to influence some change there, by speaking with the supervisor and the regulator over there.
And yeah, I mean, I would just say there is a risk aversion factor, and there is not there's a bias towards the smaller and the medium enterprises. I mean, there's definitely a so some kind of allocation mechanism and some kind of guarantee mechanisms definitely could be helpful without losing the the core business model, because every bank, every NBFC ultimately does need to deliver to its stakeholders. Anand, would you want to come in now?
I have a different take actually, Geeta. Without discounting the Swanidhi program that was configured during lockdown, it was a fabulous initiative by the government. Why go on back foot? Look, it was a wonderful attempt made by the government. Regarding data, I would say that we have created 500,000 trusted retailers whose terabytes of data is available, unconventional. They have no exposure to credit in the past, but these are credibility score. Why credit score? Look at the fact that 98% customers, citizens come to same Kirana store month on month on month on month to get the DBT. That means he is trusted. Can these data sets be used? And we are working with a couple of banking partners and NBFCs to utilize this credibility score to lend them. The credit bureaus that sir mentioned about, we are working with all 4 of them to create this score, co-partner and create this credit score. That said, yes, interesting times. We saw about 25 lakh citizens coming to our counters each month to deposit EMIs as low as 500 rupees on behalf of 33 NBFC and microfinance institutes. Via is left out, yet we are talking to them, but we serve 33 NBFC and microfinance partners. People want to pay back, just that because the sales team or collection team cannot go down, that's not a deterrent. And India is trustworthy. It's just a matter of how far you can go and attempt that. It's a dipstick that one has to do, certainly, without discounting the models of credit decisioning that you all do. But that said, yes, it is important to look at pseudo data sets for lending as well beyond the past. And like I was speaking earlier, that the lockdown in the 9 months, 10 months has fractured all the past data sets. How will you lend what Satish was talking about, 2 years this, 3 years that, and 5 years that? अभी तो 1 साल तो पूरा नील बटा सन्नाटा है मैडम, तो आप किस बेसिस पे लेंड कर रही होंगी? सबके अकाउंट जीरो होंगे, तो थोड़ा तो कोयले और डायमंड को देखना होगा अलग नजरिए से.
No, in fact, on that count, I was just saying, given your, you mentioned the credible scores. Again, do you see the public infrastructure in terms of account aggregators, OCEN,
Absolutely.
playing a role
Sehmati.
in pushing this?
Absolutely. Account aggregator, Sehmati, OCEN, Beacon, and the new online network for digital commerce that Niti Aayog is running. Fabulous programs being built. I think there is a lot of data visibility which will come up very soon. I think a lot of work has been done, especially during the lockdown, and it's been one of the most productive years for the nation building. I would say this is a stock take 1 year for the nation building.
Is there anything that you want coming out of the stock take?
I have enough
customer segment and the financial information for them. Yeah.
Yes, I have enough which has come out, and as I would say, अन्ना तुम संघर्ष करो, हम तो कर ही रहे हैं. So काम बहुत है और हो रहा है. ऐसा नहीं है कि पूरा ground zero है. The fact that government has come out with so much of subsidy disbursement, which is unsustainable in the long run, but the habit formation has been done. People now know that Kirana Dukan is also a bank. Yeah. So a lot has been done. I think I have handful of requests that I will certainly go back to policymakers, which have been written with the right intent, just that we need to help rubber meeting the road. Thank you, Geeta.
Thank you, Anand. I have also questions, and we're in the last 15 minutes. So maybe I would say that, we could each give some concluding remarks. Again, more future looking. I think let's not go overboard on what's working. I mean, they're working and, those will continue to work, but more in terms of really like what is the one thing that, if you unlock that, there will be, 10x or an exponential increase in financial inclusion, MSME credit, etc. And as I come to each of you, I will also just pass on the questions. Hardik, I have the first question for you. So maybe I could ask you to do your conclusion. The question is simple. It is, what is the rate of interest Kinara Capital charges? And I guess it goes back to cost of capital.
Yeah. So it's a full range depending on the risk, and the risk is determined by our data science algorithm, and it goes anywhere from 22% all the way up to 30%. On average, it is around 27% on a reducing balance basis across the term of the loan.
Your concluding remarks?
Well, I'm what shall we say? I'm inspired by what the data that Anand is building, right? This is data. I mean, we can get all the credit bureaus in the world and we can get all the information, but credit bureau reporting is only by financial institutions. If we can build an alternate data source of the kind of data that Anand is building on the ground of people's behaviors and be able to use that, I think it can really accelerate digital credit across the country for all kinds of businesses in urban and rural India.
So Anand, here's a customer for your data. I hope, Hartika, you go back and...
It's a partnership. It's not a customer. Yes. Thank you so much. This is great.
Okay. So Anand, maybe I'll get the next question to you, which is around data. It's asked by Ishita Sharma. COVID climate change events are showing just how vulnerable micro and small enterprises are. How can data infrastructure help financial institutions and regulators support enterprises to build sustainable businesses? I'm assuming much of this is addressed, but if you just want to, dive a little bit deeper and also give your concluding remarks.
Yeah. So beyond artificial intelligence, look at the human intelligence. Is all I would say. If you ask my Kirana store, which are also called Kinara stores in some places for Kirana Capital, my retailer can tell that who are the customers with 2 kids going to school, who are trustworthy guys who pay on time. Harness that human intelligence beyond just the artificial data. Rather than sneaking into data, getting into worrying about the GDPR issues or account aggregator methods, because again, account aggregator will aggregate the data which is available. What is not is what has to be seen. So I think that will bring out the fractured environment into a robust ecosystem. And that said, sir, 2 चीजें चाहिए. 194N Proviso 3 को कार्यान्वित करवा दीजिए, उसको आयोजित करवा दीजिए सही ढंग से. Industry, I'm telling you, will sustain this initiative of government on financial inclusion in true sense, and I will send you the almost a doctorate thesis that we have written on it. And the 27% GST एक कॉमा गलत जगह लगा हुआ है किसी सर्कुलर में, वो ठीक हो जाएगा ना तो सब ठीक हो जाएगा. और 2006 के सर्कुलर लिखे हुए हैं सर, आज 2021 में हमें 15 साल में डिजिटल हर 15 दिन में API बदल जाती है. तो डिजिटल हैज डन सो मच ऑगमेंटेशन कि बहुत कुछ BC मॉडल में किया जा सकता है. तो 2 चीजें हैं. I will come to you with those requests separately, and I'm confident it will be solved. Thank you, Geeta.
Thank you, Anand. Actually, Ajit, the question for you is the same that Anand has put forth. So I will not repeat the question, but it does talk about, the high tax burden, including GST, TDS. Can the government look into this being essential services? Amit Arora from the World Bank has asked this. I don't know, again, I mean, you can respond to this offline, but any comments as well as concluding remarks. And what, I guess the question for you is, what do you want the private sector, startup companies, fintech companies to come forward with?
So I think, first of all, what we get from listening to the other panelists is that there are business models that have tremendous momentum and are growing. from an enabling environment perspective, at least the physical infrastructure is not something that anyone has complained of so far. So what is required from what I'm hearing right now is tweaking to the learning curve. As new things happen, policies have to adjust to new technologies, new ways of doing things, all of that. So some of that learning curve that as a country we're rising up. We will see some changes over there. But what I would say is that the current momentum, if you look at the past 5 years, I would not judge the health of the industry based on the recent momentum, because a lot of those actions are so transformational and those data streams are so recent. And some of those interruptions to the data set that Mr. Bajaj has talked about are so recent that the kind of momentum that you've had despite that is actually extremely impressive. I think it's probably the fastest that we are seeing of transactions growing in the world on a per capita basis, on an over national basis. We have seen the broadest sort of reach in terms of number of individuals that have a single number anywhere in the world with the Aadhaar, which might have some obstacles that are just been mentioned by Mr. Kumar of not being able to be used for all purposes. But a lot has been done in the past 5 years that is foundation building for a pace of growth that is significantly faster than what we've had. And the past 5 years have not been bad by any metric. They've been explosive years. So I'm fairly optimistic that once we go through this, the data sets start getting rectified. The other solutions that we talked about, which is that Mr. Bajaj has talked about, that are data that is not just financial but also qualitative on individuals, that can be very complementary to the hard data that is provided by the 4 agencies. So as the Indian way of jugaad and innovating and all of that comes through, as well as the more traditional metrics start getting the momentum with all this data and this new clean data sets and approaches that are more traditional in nature also gain momentum, because that was what the foundation was laid for. I think a combination of the two can actually see massive transformation in India financially over the next 3 to 5 years. So I'm fairly optimistic. There's nothing that I've heard, at least at this panel, that is very discouraging. Almost everyone is sounding, fairly optimistic after what was a fairly disastrous year last year for the overall world and the economy. So it's a very, I would say that it's very encouraging to have been part of this discussion and getting the kind of real data and feedback that I'm getting. It's far more optimistic than I would have expected.
And Satish, you want to go next?
Yeah. Basically, I have 3 asks, and I request, we talked about Aadhaar. So I just want to say that, yes, Supreme Court has given a judgment. And so the only request we have as a MFI community is that banks are allowed to use Aadhaar. So we are also governed by RBI. So therefore, if we are an extension of banks, so if we can be given and put some conditions like we cannot store the Aadhaar and we have to mask it, etc. All those things can be taken care to make sure of the privacy, etc. So that will help tremendously. And like you said, it can really grow the business faster and quicker. The second one is about the access to capital. So if while retaining all the criteria and taking care of risk factors, if capital can be flowing to small and medium enterprises, it will help us to do on lending and then to quickly kind of rejuvenate all these small businesses across the countryside. The third one is regarding the the interest rate. See, there is a regulation by RBI that is the interest rate we can charge is cost of funds plus 10%. Now this is what we have been using all the time. There was actually cost of funds plus 10%, or it is 2.75 times the average interest rate of the top 5 banks. Now this was formulated by YH Malagam Committee in 2011. Now, the second factor, the 2.75 times, that was always much higher, so nobody ever looked at it. But today what happened, because interest rates have dipped, suddenly the 2.75 times, that top 5 banks interest rate is becoming lesser than cost of funds plus 10%. So we are forced to actually lend it. So what happened earlier, we had a fixed 10% margin, which itself was very tight. Suddenly our margins have shrunk. And interestingly, those 5 banks whose interest rates are being considered here do not lend much to the microfinance community. So therefore, I don't know how we are. So if we can relook at that, and this, there is the entire industry, MFIN, which is our industry body, has written to RBI governor and everybody to requesting to relook at this. So it's been 1 decade since this was written. So maybe it's a dynamic world, we can relook at it. Because what happened, without we doing anything, about 1.5% has been erosion has taken place because of just this formula. So these kind of things, if they can be helped, then I think the industry has already really come back. And I will approach Mr. Ajit Pai through our industry and through us, giving a representation, if he can help us in this. Thank you.
Thank you, Satish. So yes, I think an excellent panel. I would just conclude with 2 or 3 things. One, I think, yes, there's a lot of bullishness going forward that comes from, I think, the strong public infrastructure and a very strong entrepreneurial ecosystem, a spirit in the ecosystem. So I think those two really in India are unmatched. I think as we go forward, especially coming out of a COVID year, things that can help us move forward. Yes, I mean, how do we mitigate risk aversion? I do think, partial guarantees are a good way of pushing credit in certain sectors that can actually have a high ROI for the economy. So how do we identify those or get those moving? The second is, while there have been strong examples of public-private partnership in terms of private companies sitting on the public infrastructure, we've not seen too many private to private partnerships. So, whether it is for data sharing, whether it is, fintechs tying up more with NBFCs with risk share. I think that I would say is the second. And the third, purely from an MSME perspective, I mean, again, I go back to data, not just digital data, but surrogate data. And in different sectors, how enough both credit scores and enough track record of saying, when liquidity really results in a enterprise growing 10x or 4x, or which then helps in employment, which helps in the sector growth. So yes, I mean, these are a lot of work is underway across all these 3 things, and I think we've had a lot of suggestions, both from the private sector players to the government, but also, I guess, a strong recognition that what is there is working and it's working well. We really do need to just fine tune the edges, and we should be on a much stronger path. So with that, I guess we can end the session 5 minutes before time. We've addressed all the questions. It's been a good, efficient panel, and a very, very sincere thank you to all of you.
Thank you.
Thank you, Geeta.
Thank you. Bye.
Thank you, Geeta, for crafting a very engaging discussion. I would like to thank panelists Ajit, Hardika, Satish, and Anand for their insightful contribution to the conversation. We hope, if not all, few recommendations from the discussion will make its way into influencing policy. With this, I would formally close the session. For the participants, I'd request you to rejoin at 7:10 for a very special session on Vijay Ma'am's commemorative lecture. Thank you all.
Thank you.
पूरा ना हो सके अब ना वैसा कोई सपना हो We are a bank of smiles. We are a bank of smiles. We are a bank of smiles. We are a bank of smiles.
A very warm good evening to all of you. I would like to thank each one of you for joining us in the very special and the concluding session of the 17th Inclusive Finance India Summit. It is my pleasure to invite and welcome Brij Mohan sir, former Executive Director, SIDBI, Ila Ban, founder, SEBA, Mary Ellen, President and CEO, Women's World Banking, Jayashree Vyas, MD, SEBA, and Mr. S.S. Bhatt, Chief Executive Officer, FWWB, to the session. The session will begin with a brief address by Brij Mohan sir, former Executive Director of SIDBI, father of Indian Microfinance, and founding chairman of Access Development Services. Over to you, Brij Mohan sir. Brij Mohan sir, can you unmute, please? Yes. Sir, I invite you to give your, okay sir, opening address.
Good evening, everyone. It is a privilege to share the platform with respected Ilaben, Mary Ellen, Jashri Ben, and Mr. Bhatt. A very good time to thank you for helping Ananya when we needed it most. We are all ever grateful to WWB for helping Ananya at that time. Otherwise, it would not have survived. On VG, we have always been partners. First time I met her was in 1989 when she accompanied Ilaben to IDBI for a very unusual request of lending 1.5 million rupees for on lending to poor groups. For us, it was a big surprise because a NGO lending, but anyway, because Ilaben was there, we accepted that thing. And looking back, I guess that was the base for starting microfinance, what it is today. So for that, that particular event of 11 and VG coming and starting that sort of work is something which reminds me. On VG, it has been a long partnership. After that, we did some work for FWWB. There again, her role as a mother of microfinance was clearly visible. Somewhere in 2006, when we promoted Access, both we and me were, founder directors of Access Board. And what Access is today, the base was laid at that time. Likewise, somewhere in 2009, I was invited by VG and Jashri Ben to join Ananya as chairman of the company. And we both stayed on the Ananya's board and management for almost 11 years till she left us last year. And in such a long period, I have such, strong understanding of her personality, strong understanding of her. She was more an activist than a lender, and of course combined the role too. And her, commitment to women empowerment, rural, weak geographies, small institutions, and more importantly, fair microfinance. Every few months, few days, she will raise this concern that is microfinance fair now. So that was her very strong commitment to making sure that there is a genuine social enterprise in microfinance rather than a commercial enterprise. All put together, she contributed a lot in terms of building small enterprises, small institutions. Many of these startups have really grown into universal bank, small finance bank, very large NBFCs, and it was her motherly touch which really, helped this sector to come up to this level. We will remember her for all time to come for playing a motherly role in terms of building the sector, nurturing the sector, implanting social ethics in the sector. And this is the time I pay homage to her for really playing the motherly role of microfinance sector. Thank you, dear.
Thank you so much, sir, for setting the tone of the session and the commemorative lecture. Now I would request Mr. S.S. Bhatt to take the lecture forward.
Yeah, thank you, Radhika. Arya and Vipin for the excellent opportunity given to FWWE to partner with Access in hosting this program, which has audience across the world. In that way, it is a fitting tribute to Viji to spread her ideologies across the globe. I would like to thank Brijmohan sir for setting the tone for this event, highlighting the role of Viji in the microfinance sector. I would like to welcome the guests for this important event. It is great to have respected Elaben Bhatt, founder Seva, and Mary Ellen, President and CEO of Women's World Banking in New York, Jayashree Ben and Brijmohan sir in this program. I think Inclusive India Finance Summit, a distinguished summit which has gained a lot of importance over the years, is the right forum for showcasing the work of late Vijayalakshmi Das, fondly known as Viji, and to carry forward her legacy in the space of women empowerment, microfinance, livelihoods, and smallholder finance. We could not have had better persons than respected Elaben Bhatt to launch the book on Viji and give the inaugural address of Vijida's commemorative lecture, and Mary Ellen for giving the special address on women and finance to conclude the commemorative lecture. In between, as per the desire of Elaben ma'am and also Brijmohan sir, we have a women entrepreneur, Gracemi Shimre from Socio-Economic Action Trust, seat from Manipur, speaking on her experiences and association with Viji and FWWB. Hearty welcome to all the distinguished dignitaries. Before we go for the commemorative lecture, we have one more profound task to perform. In order to document the contributions of Viji to the development sector, we have tried to compile the views of industry veterans, academicians, partners, associates, and the family members, and bring it in the form of a book so that it is a useful reference for the young leaders and the practitioners. Before I request the dignitaries to do the honors, I would like to express deep sense of appreciations and thanks to Prachi Gandhi, a sociologist, the facilitator and author of this book. And inspired by Viji's work, Prachi has started a foundation for helping the women in the last mile to bring them awareness on various aspects. I think Prachi will have all the success inspired by Viji. And Neha, my colleague in FWWB, and her team, and Mr. Katan Bhai, the designer for putting the things together and bringing it in the form of a beautiful book. Thank the FWWB board and Chair Jayashree Ben for all the support. I also thank Elaben and Mary Ellen for consenting to launch the book and address the gathering and talk on a subject which was very close to the heart of Vijay. I would like to quote some of the gist of the Vijay's personality as written by the contributors. Vijay was a most genuine, humane, and approachable human being, a true friend who would tirelessly bring the reality of poor women to investors, international organizations, government bodies, and anyone who had any influence to help them. A traveler, a spirited explorer with exceptional courage, who was always on the lookout of ways to empower women at the grassroots through economic activity and technical support, while putting the needs of the borrowers ahead of herself. Her commitment to rural women and small and marginal farmers was steadfast and unmatchable. Vijay has most fondly been referred to as a Karmavir, one who performed the duty in a noble, heroic manner to a doyen of Indian microfinance, the iconic woman who lit the light of success to millions of women, a missionary with a zeal to improve the lives of poor women and to promote their direct participation in the economy through access to financial services. Vijay will always be remembered as the one who laid the initial foundation for the growth of the microfinance sector in India, wherein she, with her colleagues, fought to have the rules changed so that banks could lend to SHGs as part of the priority lending portfolio. Much on Vijay is available in this book, which will be made available shortly to all the public. May I request Honorable Ilaben Bhatt, the mother of Indian microfinance, who has started Microfinance India and founder of Seva, to release the book Vijay fondly remembered, the nurturer of Indian microfinance, and Mary Ellen, the doyen of Women Empowerment Program across the globe, and Mr. Bridgemohan, the sector expert, and Jayashree Ban, chair, to join the event of release of the book. May I now hand over the podium to respected Ela Ben and Mary Ellen and other dignitaries to release the book. Arya.
Yes, sir. We have shown the flip book, sir.
Yeah. I think.
Great. Mr. Bhatt, we request you to
May I now
continue the
request
discussion.
Ilaben to give her address. Ilaben, ma'am.
Yeah. You hear me?
Yeah.
So today we are launching the book, and let me do it physically. Launch the book to the world of finance. I'm very happy to do this. But I cannot say I'm very happy. I feel sad at the same time, but I also feel really proud. Proud of my, I had two arms, one arm being Jayashri Vyas and the other arm being Vijaya Lakshmi. I never called her Viji. I gave her full name called Vijaya Lakshmi, and sometimes in joke I used to call her Nagar Lakshmi. So why Nagar Lakshmi? I'll soon tell you something. So with this launch of the book, I'm welcoming everybody from far, from near, and welcoming virtually. That is, of course, satisfying, but not fully. I can't shake hand with you. I can't help you. Anyway, I have to give a lecture. Let me start. What I want to say, the title of my lecture that I have prepared is Banking on Women, Now and Tomorrow. So this is the faith that has been created by Viji to all of us. Secondly, virtual welcome to our city, Ahmedabad. You are all in Ahmedabad, our hometown. And our hometown where women have been engaged with women in finance since the beginning of 20th century. Ahmedabad was known as center of textile. There were over 100 textile mills in the city in the first decades of the 20th century. Textiles are no more now. Today, Ahmedabad, I would like to be called Ahmedabad as center of women's finance. Ambitious. Here is Jayashri Vyas, one arm of my banking in retail and running Seva Bank, reaching out to thousands of women each week. Here is Vijaya Lakshmi, my second arm, FWWB. She's in absentia, reaching out to hundreds of women's groups and federations and associations across India, serving as second tier of banking. And Mary Ellen, dear Mary Ellen Iskandaria, very interesting name. Who is the president of WWB, Women's World Banking. WWB is also equally a favorite of me, like Seva Bank. That WWB that is based in New York, far, and my dearest colleague and also my friend, close friend. I remember Michaela Walsh, Esther Oklu, Nancy Barry, Jennifer in Kenya. If you are listening to me, I say hello to you. All my best wishes. They are serving at the global level, spread across the region of the world, and reaching out to national entities of women's finance, and they are all like a family. All the three financial institutions are standing firmly, rising, and spreading. And in addition, we have in Ahmedabad women's, perhaps only, a women's social insurance organization, which is called Vimo Seva. It's a cooperative. We have Ananya, women's wholesale finance company in India. We have women's microfinance training school, and more can be added. However, we are slow. Though slow in the eyes of our times of chasing growth at the cost of almost anything else, these women's finance institutions are steady in their growth. In economic terms, they are sustainable and helping poor women's families to be sustainable, reaching worldwide. And this women in finance connection is not new in Ahmedabad. That is why I refer to Ahmedabad, my city. It's not new. Historically, Ahmedabad, let me mention, historically, it builds, the women finance has went on building on the footsteps of Harkuarba Hachi Singh, who financed silk trade in China in those days. It builds on the Mughal Empress Noor Jahan, who financed and owned shipping trade from Cambay, it's a port, to Europe, all the way to Europe. And Harkuarba was also a partner to that. So I take Ahmedabad as the center of women's finance. And yet, the life is full of paradoxes. Many of them bring pain and shame as well. How can we otherwise explain to us the recent largest and longest march of millions of migrants in India? They're hardworking, honest workers. India's demographic dividends due to this during this lockdown. Walking back home, these migrants, walking back home, empty stomach, empty pocket, without due wages, without any health support, measures or any contingency advance, and any future ahead. They had access to no saving or credit, investment, advance, relief, or compensation to mitigate their unprecedented misery of loss of job and a future both. On the other hand, our cities, called the citadels of culture and engines of economic growth and buoyant banking and melting pots of social hierarchies. These cities, they just silently looked away. To them, we close our doors to residential areas, industrial sites, beaming banks, and business districts. Authorities looked away as the march happened. Maybe the $1 trillion economy decided to let hurt its own workforce. Can't believe. Let me say, had more finance be in the hands of more women, this situation of migrants, poor migrants, would not have surfaced. I believe that. No doubt. As an economy and also as a society or as a culture, we collectively consented to this bloodless but acute violence to our own working majority in India. And such violence with social consent of the society is happening all the time. It's not new. Poverty is violence with consent of the society. We continue to keep our poor without basic primary needs like roti kapda makan, as well as pure air, clean air, or fertile land. But when women have access to finance, money goes into these primary needs and poverty recedes. Our own experience that I say. Another paradox is that we have left economy to the economists, culture to the culturists, and finance to finance managers. They can help a great deal, of course, but our banks and financial institutions and economy must be owned and shaped by those whose daily economic acts of producing, consuming, trading, investing, financing, and banking, they shape the economy. Otherwise, it is unjust governance of our economy, our banks, and our finance system. The balance is now in favor of large economic and finance organizations. Thinkers, finance, thinkers, analysts, teachers, policymakers, budget allocators, investment deciders at the macro level, and not in favor of those who make the economy run, the millions of women whose economic activities make banking and financing work. The economic benefits in terms of food, clothing, shelter to the working poor are diminishing. You see that. We finance shopping malls, but not the street vendors. We finance dams, but not the running water for the homes in slums. Metro rails, but not the three-wheelers. New economic zones, but not the basic shelter of the poor. Let the balance move from the elite macro ideas to day-to-day normal economic activities and decisions of the women workers and small local businesses run by women. Their food, clothing, shelter related production, consumption, ownership needs to be financed. Needs to be financed uh, so that they move bottom up to surge the economy of the world. Let us put our goal for most financing to move the poorest, what is called first family, poorest family's income rise, I say 6% to 10%, and add up to 10% GDP of our country. Let the finance cause economic growth at the household level first and not necessarily at the sector or macro level. This is what I understand from my experience. Please do not get me wrong. I am not against paradox. I do understand that often paradoxes are potent. And some of the potency we do have realized. My experience with Seva Cooperative Bank, Seva Cooperative Federation, Friends of Women's World Banking, WWB, then WIGO, that is Women in Informal Employment, Globalizing and Organizing. Well, locally and internationally, it confirms it to me, and let me mention a few. Building a cooperative bank of poor, illiterate women, distributing dividend every year without fail is an example of using potency of the paradox of a bank of poor. Running a trade union of informal sector workers is another paradox. Resolved. Retail marketing, Rudy, where the where the rural producers are traders, are managers, are consumers, is another example. Running academy of illiterate and semi-literate women learning the basics of organizing, cooperatives, and leadership is one more example. I have confidence in women when it is local, work, nurturance, and peace. Peace. That is the goal. Here, women are natural leaders, as Gandhiji said. And when finance or banking are run by women, more and more potency of the paradox of our economy blooms. Perhaps it is possible to have micro without macro. But surely it is not possible to have macro without micro. This is so sure for finance and banking. But let us not divide the reality. However, macro changes must have micro project, micro impact, while micro changes must add up to shape the macro change. Global banking must reach out to local banking of women, and local banking of women must add up to shape the global banks. This is possible. If so, then why does the world gets lost into macro, meaning top-down economic and finance policy making that we see in our development banking today? It is painful to see that the huge, very huge finance has flowed to destruction, even to self-destruction, financing large carbon footprint of goods and services, enormous water footprint of monoculture crops, for example, is indeed a path to destruction. Financing a digitalization without arrangements for taking care of digital waste, real and virtual, is a path to destruction. Finance, financial services should be flowing to nurturing our daily life, mainly food and health, ensuring our soil that nurtures the earth, that nurtures all living beings. The finance must support development of the human mind and nurtures the knowledge and suitable technology. We need nurturing investments that nurture our next generation as much as that of birds, beasts, and trees. We need nurturing investments in women's activities that clean air and water, that green villages and cities, and sustain us all. Let us encourage community ownership of assets as much as building private assets. Given a fair chance, the spirit of cooperation is just as likely to lead us to profits as a dose of healthy competition. The present banking sector needs to realize that low income households need to enhance their incomes, not cash flow smothering. Let us invest in skills, productive assets, in working capital of the poor and women, where it has most impact. Hopefully, the regulations will help us, FWWB, and others in supporting innovative financial services. The path to future, I would head with Viji and FWWB is that of nurturance. I mean, if someone had not nurtured us in our infancy and childhood, we would not have been here. Women, dear sisters and brothers, we must develop our path to nurturance. Banking most support the path of nurturance, and friends of women and banking must invest mind and money in this path of nurturance worldwide. I do bank on women in general when it comes to finding a solution to any crisis. I have great faith in women. Lastly, the pandemic lesson learned, as I understand, is that together we form this world. Our relationships nourish us all, you, me, people, and the nature. We are under one sky. We breathe a common air. We draw water from a common ground. We eat the produce of the same earth that sustains us all living beings. Let us acknowledge this bond, what I call Anubandh, bond between us and the world, building an economy of nurturance. Thank you all. Thank you, Nagar Shakti, that gave us this opportunity to meet and talk about future. Thank you.
Thank you, Ila Ben, for such an illustrious address, giving the path for the future. I think the need for supporting the micro to bring the changes in macro with futuristic ideas has been given by respected Ila Ben. I think it is all our responsibility, those who are in the field, to practice, to bring changes in the micro level. And the path of the future is nurturance. Unless we nurture our future generation, our climate, our surroundings, we will not have any future. That is the guidance given by respected Ila Ben. I think we thank you very much from the bottom of our heart for giving your time in addressing such a large gathering across the globe. Thank you, Ila Ben, for that. May I now bring in a woman entrepreneur from the eastern part of India, from Manipur. She is a entrepreneur supported by FWWB, and she would like to share the experiences of working with FWWB and VG and how she has developed. May I now request Arya to play the video of the women entrepreneur?
Hi, my name is Gresmi K. Shimray. I was working outside my home state for many years in industry and in hospitality, and always had a dream that to own and manage my own business in my native town. Hence, I started saving like whatever I could manage, and after that I got married and settled down in my hometown, and the dream which I had before started to materialize, and I opened my small grocery shop in 2016 with the little saving which I had accumulated over the years and some financial support for my families and friends. And the challenge while starting and running the business was never easy right from the initial days, and I had faced a lot of challenge like inadequate finance, like lack of capital. Lack of capital is the major roadblock for my business, for running business and to start and later to scale up. First competition, facing tough competition from other grocery shop, which exposed the one biggest challenge for survival. And time of management is also a big challenge for me, as I had to manage all the household and some other social responsibilities along with my business. And marketing strategy, the lacking skills in product and service for reaching out to maximum clients and receive optimum output, and in availability of raw materials due to poor transportation service could not cater to demand of clients, and due to lack of raw material supply. Demand and supply gap, like most of the time we could not supply the goods on time as per demand. Type of support I have been while facing this all these challenges, I've came across FWWB through SEED, and where I have received a loan support from microcredit loan for income generating activities in an amount of 50,000 from SEED, and had also received an amount of 1 lakh from FWWB for income generation. And capacity building support, I have attended the financial education on financial education, business management. There's livelihood skills training on bakery under the School of Entrepreneurship Development of FWWB, which organized by SEED. After I had attended the training on education, financial education, I've learned a lot, like a basic knowledge in running business, like maintaining record, and in terms of sales, both cash and credit, and like maintaining budget, all the expense, incomes, and inventories. And actually, before COVID-19, FWWB official has to visit like at least once in a month, and they have been very supportive and used to provide me technical and moral support in running my business. And actually, especially VG ma'am, whenever she visited to Ukrul, she did visit my shop and would always appreciate and encourage me what in and what I was doing. And the team of FWWB has become a family now, and overall I extremely satisfied and happy with all the financial support and building capacity support FWWB providing. And I wish them all the very, very best in their future endeavor. And my future plan, through my hard work along with the hand holding and continued support from FWWB, and I'm able to establish and to run my business very well. In fact, along with the grocery shop, I have also diversified and introduced mobile recharging facilities and bakery items and much more. And presently, which I operating my shop is a bit crowded place, and in the near future I want to expand my shop and open a new bakery shop so that I could reach out more clients and also provide employment opportunities to women in my community. And I hope that one day I will achieve all this. Thank you.
Thank you, Gracemi, for giving such an inspiring thought to the millions of women entrepreneurs who would like to come out of the house and start their small enterprises and small businesses. Thank you very much for that. May I now turn to Mrs. Mary Ellen, President and CEO of Women's World Banking New York. As I mentioned, she is a doyen of women economic empowerment across the globe, more especially in the eastern part and also the southern part, in providing the required knowledge, the support systems, and also encouraging the women to see what is their future, how should they come out and lead their life. May I request Mary Ellen to take over and give the special address? Over to Mary Ellen.
Thank you so much, Mr. Bhatt. I don't think I've ever been called a doyenne before, so I'm very honored by that new title. Good evening, everyone. I'm Mary Ellen Iskandarian, the President and CEO of Women's World Banking. And I first want to thank Access and the other organizers for inviting me to deliver this first Vijayalakshmi Das Memorial Lecture on Women and Finance. It's an address that has great personal meaning for me and for the organization I lead. I am deeply touched and humbled to be following Ela Ben's remarks, but I still thought it might be fitting if I start with a few words about Viji herself, because Viji's work and all of us who she has inspired continue to be at the center of the story of women's economic empowerment around the world. As many people have said here today already, Viji was a great friend of Women's World Banking and of low-income women everywhere. And I'm also very proud to call her my friend. Throughout her life, she was a strong, clear, and brave voice for women's empowerment at a time when it was hard and maybe even sometimes dangerous for such views to be expressed. I don't think it's an overstatement at all to say that Indian microfinance exists because of the vision of Viji Das, and Brij Mohan supported that for us in his remarks earlier. Through Friends of Women's World Banking, an institution that Viji led since 1989, and then later Ananya, which Viji founded in 2009, hundreds of financial institutions in India received the financing and technical assistance they needed to serve millions of low-income women. She was frequently the first lender willing to take a chance on newly created microfinance institutions, including our own network member, Ujjivan. Viji's financial and technical support enabled those organizations to have an even greater impact on the lives not only of their women customers, but on those women's children and their wider communities as well. But the impact of Viji's life and work extended far beyond India. Thanks to her willingness to share her vision with others around the world, including through the Women's World Banking Network, women everywhere truly owe her a debt of gratitude for her courage and determination in promoting greater access to financial services for women, many of whom were among the most poor and most isolated in their societies. Now, Viji's hard work is an indelible part of our memories of her, but I would be remiss in not also telling you just how much fun she was. She had a wonderful, sly sense of humor. She took unmitigated delight in sharing photos and telling stories about her children and her grandchildren. And she had a truly uncanny ability, even under very stressful or uncertain situations, to make you feel immediately at home and among friends and family. Viji was taken from us far too soon, but I can assure you that her memory drives all of us at Women's World Banking to work even harder for equality so that maybe, just maybe, we can come close to matching her energy, her passion, her creativity, and her humanity. I wonder if we could put up that first slide. Actually, why don't we advance to the third slide? We've got on Women's World Banking. One more. Thank you. While Viji and her legacy will be known to many of you, Women's World Banking, the organization of which she was such a great supporter, may not be. So please allow me to spend a little time talking about our role. For more than 40 years, Women's World Banking has advocated for the financial security, prosperity, and economic empowerment of women by driving action and investments in financial inclusion. We partner with governments to enhance national policies that promote women's financial inclusion, and with financial service providers to develop and deploy innovative, sustainable, and scalable financial solutions that meet women's needs. We also invest directly in financial service providers like Ujjivan and Ananya to influence these organizations to better serve women as leaders, as employees, and as customers. And we do this because women still participate unequally in economies across the globe. Women are less likely to participate in the labor force than men. If they are employed, it is often in the informal sector or in vulnerable jobs. Women are paid less than men. They bear a disproportionate responsibility for unpaid care and household work, and they are less likely to have social and legal protections. Women are less likely to have access to financial services, and female entrepreneurs face many more disadvantages than men do in starting a business or receiving the funding to grow. Women are constrained from achieving the highest leadership positions within our organizations and institutions. But with all of that said, let me emphasize, women are not victims. When women are given the tools to participate equally to men, they are an economic force to be reckoned with. Women's full participation is going to be vital to our growth and recovery from this pandemic. By reaching economic gender equality, 13 trillion with a T dollars could be added to global GDP by 2030. Right now, with the prospect of a lost decade of growth, the world can simply no longer afford inequality. So to draw your attention to this slide, Women's World Banking has been active in India since our founding in 1979, initially through our partnership with Ilaben at Sewa Bank and with VG at Friends of Women's World Banking. Since those first two partnerships, we've grown in India to be a diverse network of public and private sector banks, non-bank financial companies, NGOs, and fintechs, all working to serve low-income women and contributing to the cross-pollination of learning and collaboration across geographies. I'm particularly thrilled to tell you that in the last 2 years, we've also made serious investments in building a physical presence here in India. The Women's World Banking India team, under the leadership of Sriram Jagannathan, has been working with our network partners and other Indian financial institutions to better understand Indian women's specific needs and the challenges they face in financial inclusion. And then our aim is to make all of the findings from these various discussions available to the broader industry and scale them to include millions more women in the formal financial system. Lastly, I'd like to make a plug for one of Women's World Banking's most important programs, and one which was really near and dear to VG's heart. She knew that because financial institutions with gender diverse leadership teams not only have superior financial results, but are also more likely to serve women clients well, we offer a variety of leadership and diversity training programs. Since 2007, 95 leaders representing 23 Indian financial service providers have attended our programs. 2 years ago, we expanded this training to include a program that's tailored specifically to policymakers and regulators. We offer this program in partnership with Oxford University and have welcomed central bankers, insurance commissioners, planning and finance ministry officials from around the world. But so far, I'm sorry to report that no Indian regulators or policy officials have joined us, which is really a shame, given India's leadership in digital financial inclusion and how much they could share with the other members of the class. But we're recruiting for the 2021 class now. So if you fall into that category, please apply through the Leadership and Diversity section of our website at womensworldbanking.org. Could you go to the next slide, please? So this talk was specifically supposed to be around women and finance and the barriers and opportunities that COVID-19 has put up for women's economic empowerment. So I'm happy to say that today, more than at any other time, Women's World Banking's work carries huge significance in India and around the world. According to UN Women, the pandemic will push 96 million people into extreme poverty, 47 million of whom are women and girls. And it's not just low-income communities who are at risk now. Various reports highlight a worrying trend that even middle-income countries are at risk of falling back into extreme poverty. An estimated 11 million girls may leave school by the end of the pandemic. And as we know from previous crises, they're very unlikely to return. Women are shouldering the extra burdens of family care, facing intimate partner violence at tremendous rates, and are losing their jobs at a disproportionate rate as well. Women came into the pandemic facing a combination of economic barriers, which leave them less likely to have the financial tools they need, such as savings, insurance, digital financial services, and access to credit to manage in this economic downturn. In both the short and long term, women's economic exclusion will slow our recovery globally. Women-owned micro and small and medium-sized enterprises are likely to service local communities or to be in sectors like catering and tourism that have been particularly hard hit by lockdowns and other COVID-related restrictions. And since most women-owned MSMEs operate in the informal sector, they're virtually invisible for the purposes of government support programs. Even before COVID, women-owned businesses struggled to get the financing they need to grow. The unmet credit need for women entrepreneurs globally is $1.7 trillion. And unfortunately, this story of unequal access continues when it comes to financial services delivered through technology, and the mobile internet gap here in India is one of the largest in the world, with only 16% of women owning smartphones. And as we all know today, mobile internet access is vital for running a business, transferring money, and connecting with both clients and suppliers, as well as with the broader community. Now, as stark as those figures sound, I remain optimistic. And believe it or not, I think COVID offers the world an unprecedented opportunity to accelerate financial inclusion. If you believe, as I do, in that old saying of don't let a good crisis go to waste, then now is a time for hope and for action in furthering the goals of women's financial inclusion. In response to the pandemic, India, along with 156 other governments around the world, adapted or implemented a social benefits program to provide relief payments to their citizens in need. But what made India's program stand out was that your social benefits program was deliberately targeted to women. Apart from being timely and much needed support for families that were hardest hit by the economic effects of the pandemic, these payments delivered to a bank account digitally provided a gateway for women to join the formal financial system. As a result of these Indian government transfers, 25 million new PMJDY accounts were opened to receive these subsidies. These new bank accounts, along with the remaining 176 million poor women who do not yet own PMJDY accounts, represent a huge opportunity to deepen financial inclusion in India. And India can provide a role model for the rest of the world to show just how it's done. With the Jan Dhan accounts, there is a real opportunity to encourage a culture of savings that will protect women and their families from the next economic shock. COVID-19 has also accelerated the use of digital financial services around the world. We strongly believe this trend and the emergence of a growing, but still small, fintech community that really understands women clients will deliver more relevant financial services to women via digital channels. But we must continue to close the technology gap and get more phones into the hands of women. And this in turn leads to a third area of opportunity, social commerce. Increasingly, women entrepreneurs are using social media platforms as storefronts for their businesses and for transacting with clients via those platforms. Our research in India and in Indonesia found that there are opportunities to reach women through these platforms to deliver financial services. India's social commerce sector is poised to grow to twice its current size, all the way to $70 billion within the next 10 years. And this growth will be fueled by resellers who are primarily first-time entrepreneurs and predominantly women who wish to supplement their household income. So these three trends that we're seeing coming out of COVID-19 give us optimism if and only if we're diligent in following them through. In closing, I'd like to give you a quick case study of just how Women's World Banking is working here in India, this time with Bank of Baroda, to put this crisis to good use by capitalizing on the Indian government's timely distribution of social benefits payments to women. Can I have the next slide, please? So earlier, I alluded to the fact that India was one of the few countries around the world targeting their social benefits payments to women specifically. They managed to reach more than 200 million women during the early COVID pandemic in this way. And India was able to respond so effectively because of the financial infrastructure that had been built ahead of time. As you know, India is unique in combining its Aadhaar identification capability with the Jan Dhan basic savings account. This combination covers 420 million people, which goes far beyond most other emerging markets' banking penetration at the base of the pyramid. We've been working with Bank of Baroda, one of the largest public sector banks in India, for the last 18 months, and have been able to see firsthand how this powerful combination can be leveraged to build economic resilience for households at scale. And it is our belief that women in particular and households in general can be transformed by focusing on improving their engagement with the Jan Dhan account. We designed a simple 3-point solution to address this opportunity. First, we designed a product that was a savings solution that we call the Jan Dhan Plus account, which invites all customers to save small amounts regularly and be rewarded as a Jan Dhan Plus customer and receive a guaranteed 5,000 rupee overdraft line. Secondly, we designed a very relevant channel. We trained and retrained banking agents so they could function as relationship managers to explain this new package to customers and invite their participation. And then very importantly, we combined heightened awareness and behavioral nudges. We created communication material as well as a series of nudges to remind women to deposit small amounts. May I have the next slide, please? So if we go from left to right, we'll see that we discovered that more than 70% of Bank of Baroda's customers save small amounts, but they do so regularly, but in informal ways outside of the bank. In customer interviews, we heard that they don't feel that banks welcome them. They don't feel that banks understand their needs, and they don't understand how to engage with banks. They do, however, trust government banks, and they are willing to save with them if they're invited to do so. We also found that banking agents are absolutely key for engaging customers with these services. In the middle of the slide, we see that our small savings scheme resonated with both low-income women and men, as it was linked to the reward of the 5,000 rupee overdraft line. Even during the height of the pandemic last year, 32% of low-income women who walked into a banking correspondent location signed up to become Jan Dhan Plus customers. The promise of getting that overdraft credit line worked as a powerful incentive to sustain women's savings behavior, resulting in 18% of those women who signed up completing the 4 required transactions during that short pilot period, despite the impact of COVID. We estimate that in a non-COVID steady state environment, 75% of the women who signed up would have been able to complete those deposits. And then the third block of this slide, we see that women agents are more relationship driven, and they've provided 3 times the value to the bank as their male counterparts. They were responsible for larger average transactions. They were more able to convince more Jan Dhan customers to both sign up in the first place, and then were more effective in cross-selling. And this was with both male, less than 10% of the overall agent base. And that's really paradoxical because even 50% of the Jan Dhan account holders are women. May I have the last slide, please? Or the next slide. So we're very excited about the findings from this pilot because it suggests to us that women will save with a bank if the conditions are right for them. And while COVID has undoubtedly impacted this segment's ability to save significantly in the short term, it has served to remind people of the importance of building their economic resilience through savings. The power of regular small savings to help build a cushion is underscored by this Jan Dhan Plus scheme, and it resonates very well with India's agenda of a self-reliant India. I'm happy to say we are in discussions with the bank to see if we can scale nationally, and we're speaking with other Indian public sector banks to replicate this proposition with their customer base as well. Based on what we've found, we estimate that public sector banks supported by the government of India could reach more than 50 million low-income women with this solution. We can also nearly double Jan Dhan deposits, increase access to credit for families of low-income women, expand their digital capabilities, and this is the part I'm most excited about, develop a workforce of women banking agents across India. Wouldn't that be a legacy that Vijay Das could look down from wherever she is and smile upon? Thank you very much.
Thank you, Mary Ellen, for such an informative, illustrious, and also educative address. I think definitely Vijay would be happy wherever she is, hearing you and Elaban speaking on the future of women, and also you highlighting the role of women in Indian development, the role of Indian women in the development sector, and also that women are capable to save if conducive environment is there. I think it's a lesson for all of us to see that we provide conducive environment for the women to save and make them economically sustainable and viable entrepreneurs in this world. I think your address on the COVID pandemic and how to convert that into an opportunity is an eye opener for many of the women entrepreneurs, which would be helpful in shaping their business in future. I thank you very much for such the illustrious address. May I now request Jayashree Ben to speak 2 words to conclude the session. Jayashree Ben.
First of all, I will thank Access IFI Summit for arranging this kind of session. I, of course, thank Dimon sir, Bhatt sir, Ila Ben, and Mary Ellen, and for talking about VG. To be very frank with you, nobody thought it, but I never even know that this will be the time when we will have a launch of book of VG, because from the beginning, if you remember, from the first summit, Access Summit, till last Access Summit, VG was always in the summit, and I was also with her. So I'm feeling so very bad that she is not here, but I'm very happy that Ila Ben and everybody who has talked about VG's work and now VG's future, that is something which is really will be very helpful, and will ensure that whatever VG has done, we will add value to all this work. And thank you very much again for everybody in the audience also. Of course, I'm not able to see anybody, but that you came here and stayed and heard what we were saying. Thank you very much.
Thank you, everyone. May I now hand over to Arya and Vipin?
Yeah. So I'm really glad that the last session, and for me the most important session of the 2-day summit, was that we all collected to remember Viji. And I always think that she was among the tallest leaders of the microfinance sector, of the inclusive finance sector, and her contribution, as Mr. Brijmohan, Ila Ben, Jayashree Ben, Mary, all talked about her. She was an incredible person, and we are all here together, missing and talking about Viji as the session went on. Thank you very much, everybody. And just to keep memories of Viji alive, we would like to do something each year, whether we do it as a part of the Inclusive Finance India Awards, or we keep a special lecture. But Viji was so special to all of us and to the sector that it's very critical and very important that we keep Viji's vision, Viji's sense of humor, and everything to remember. And for me, a very, very special thanks to Ila Ben, who delivered such a wonderful, emotional keynote address with a lot of vision about what we can all do, being micro and still influence the macro. So thank you very much, everybody. For us, it's now about 8:30 in the evening. And Mary, we have to get you over to India next year. I already told you about the dates, but I'm going to confirm those in the next maybe a week or so. But very happy for the 2 days of the Inclusive Finance India Summit to end with remembering Viji. So I'm really happy and my team's really happy, and thank you all very much.
Thank you all, ma'am. With this, we are at the conclusion of the Inclusive Finance India Summit. With the 17th Inclusive Finance India Summit concluded, we are grateful for the continued support from diverse stakeholders to this effort, coordinated by a very small team in Access and Assist. Each year, there is an effort to bring new freshness into the summit by introducing new themes, new sub-initiatives, new knowledge products, and new formats. This year, having to host this large Canvas summit in a virtual format, of course, made it even much more challenging. We have received some really positive, encouraging feedback so far in the two days. At the end of the 2 days, it is most appropriate to thank a host of stakeholders who have helped to bring the summit together. To start with, I would like to thank all sponsors for the continued and incredible support and commitment to the summit, which otherwise has been a difficult year. I thank our long-term partners, MasterCard, the Gates Foundation, NABARD, HSBC, IDFC First Bank, MFIN, Exion, and Annapurna Microfinance. I must mention Axis Bank, Ujjivan, Utkarsh, and Suryoday Small Finance Banks for the steadfast support, and Kinara Capital and Equifax for joining us for the first time. I also thank SIDBI, Rabo Foundation, and AU Small Finance Bank for coming back on board to support the summit. Technical partners Dwara, CRIF, Lead at Kriya University, Sankalp, Fair Finance, Water.org, FWWB, and APMAS for working closely with the Secretariat for co-designing and co-curating sessions and putting together the panels. Secondly, we are most grateful to all the speakers from across India and outside who spoke in 24 sessions over 2 days of the summit, for sharing their views, perspectives on various themes and sub-themes. Special thanks to the moderator of all panels for making the extra effort of bringing the panel together. I would like to thank our group of advisors led by Mr. Brij Mohan for their support and feedback. We hope that the summit has been a useful platform for learning, sharing, and networking. Please do send across your feedback and suggestions for us to improve. We thank all of you for attending the summit annually. Your participation and engagement encourages us to continue to put in the required energies in organizing this event every year. Thanks to NUMEC, our event managers, for helping organize such a big event, and also to our technology service provider, Dreamcast team. I would like to appreciate the hard work and effort of the Summit Secretariat team, Priyamada Rathod, who anchored the entire initiative, guided by Radhika Agase and supported by Dhruv. Thanks to Lalita Sridharan and the entire administration team led by Subir Ghosh for their wonderful logistical management. Thanks so much, Vipin, for your patient support as always. We hope to organize the 2021 summit in December this year, in less than 11 months, in a physical format, hopefully, and have you all join in person. Thank you very much. With this, we formally close the summit.
Thank you very much. Thank you, everyone. Yeah.